September seasonality. I know for me personally, I generally look for the market to pull back after Magnificent Seven earnings. Typically, September and October can be pretty weak months. I would love to know what you guys are looking at going into September.
So as far as sentiment, I'm going to try to go into September with a lack of any bias. One thing that's working well for me as of late is more of a lower time frame focus. So instead of looking for, say, a weekly squeeze or a daily squeeze, taking my watch list and looking for a 30-minute, 15-minute, 5-minute. And I think, regardless of whether or not September is a market where we're trending higher, trending lower, or an overall month of chop, that's where I think you can find those nice plates of opportunity. And ideally, try to wake up in cash.
I think you need to approach it from a very similar perspective. I think there's so much to be said, because I grew up swing trading. But the fact of the matter is that the current environment, I think, requires that. So either pursue the market where you're willing to wake up each morning with fresh eyes and just, this is where we're at. This is what I'm looking to day trade. And I know Bruce will have some great insight on this because he manages accounts that are SPX only, right? Because you have tax advantages, you have a product that is always moving. So instead of saying, I have to have squeezes into individual equities or, whatever you may have to that way of thinking, you can just say, I'm going to wake up and trade SPX every single day. And I think that provides a lot of great opportunity without risking any kind of overnight risk, be it geopolitical or otherwise. And then I also think that if you are holding equities, be willing to sell calls against them. You don't have to bail on everything, but hedge it off. You can really cut your deltas by selling those calls against it. And if by pure luck you get called away, that's okay. But if not, it just makes it so much easier to withstand that, the movement that we may see in the next 4 to 6 weeks.
I'm more or less in agreement, though I tend to shorten my time frames. I like the fact that we're getting a little pullback. I want to buy stuff. September does tend to be a little more bearish, more choppy bearish, and then October gets choppy again. But, every 4 years we have an election cycle, which we're in right now, but we also don't get rate cuts. They're probably priced into the market, so I'm just looking for the relative performers, looking to buy things that aren't necessarily the indexes. I'm looking to buy staples and utilities, and during the day, I scalp. That's what I do. Shorten the time frame if I'm looking for a trade to do what Henry's talking about, hedge off some of my other risk. I sell calls, right? If something's popping in the middle of the day, which it often does, when we have a nice down day like today, I own NVIDIA long-term, so I sold calls against it when it popped. I buy or sell puts in my longer-term accounts. When things are going down, I'm selling puts because I want that extra premium and I want the vol crush.
Great ideas from you guys. And I cannot believe that I hear the day that Henry is selling covered calls. That just blows my mind. It's awesome. I love it because I've been doing the same thing. And Lorna, same thing. I've been selling naked puts on the downside, writing cover calls on the upside, that kind of thing, and scalping them for the most part. You sell something for $1, you buy it back for 20 cents or whatever, and you're out, move on to the next one. And that's been working really well. The focus on the SPX is really always there, and I use that as kind of the core to trade around because to me it's easier to trade the tide than to try to pick the boats. But you want to trade the tide, but you want to throw some spicy trades in there as well, and that's the NVIDIA and Tesla and Amazon, all that kind of stuff. Anyway, a lot is going to be happening in September. I am bullish, but I am hedging on the downside. Probably I'm bullish light or very selectively, utilizing the dual prong approach of trying to get long, maybe a little bit longer out, and then get really short-term trades or scalps, and then sprinkling a little hedging on the downside of that just in case we get another big flush like we had with the Japanese yen deal.
Normally, September and October can provide a good buying opportunity, especially for, long-term stocks. So that's something that I generally try to prepare for, just kind of like raise some cash and get ready for that in case a nice buying opportunity. But I mean, honestly, right now, looking at the S&P, I think as long as the S&P futures can stay above, let's say 5540, definitely 5500. I mean, I think we're still on the buy side. I think that the NASDAQ has had it just a little bit rougher recently because of the speculation and kind of the pullback that we have seen in the semiconductors. Generally, these pullbacks in the market are buying opportunities because once you hit the end of October and November, that's when you're back into generally like the Santa rally time frame, earnings going into January. So that's pretty much what I'm looking at.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me over.